Do I need a corporation? Well, maybe, maybe not. First off, I am not your lawyer. I'm not your CPA. This is not legal or tax advice. I'm just providing kind of run of the mill standard information that you can find anywhere on the internet. Use me as a resource, not your only resource. But let's answer this question. Do I need a corporation? Honestly, probably not. Okay. Again, not legal advice. I'm not telling you what to do. But you have to kind of look at a couple of different things. First off, we have a guide at Better Legal. I'm going to link it down in the description. But we have what's called our Choose Your Own Adventure Guide. Choose Your Own Entity Adventure. Yeah. And it's basically a comic book, which is kind of a choose your own adventure comic where, a professional asks a question, you go right for one answer and down for another answer, and then another question, right, left, whatever. So it's kind of like a little labyrinth of questions that a professional would ask you to determine this answer. Okay. So let's look at the history behind corporations first. Okay. Corporations are older than the United States. All right. You might have heard of like the East India Company. That was a corporation. Maybe technically not a corporation, but something similar to that. And a corporation has shareholders, and they've got all these rules. Okay. So like back in the day when things were a lot more formal, just like when you look at in the 1800s, how they, wore the wigs and they had all these fancy clothes to go do anything. Like everything back then was just so much more formalized. All right. So corporations are kind of formal, right? It's like you're not going to wear a tuxedo to a baseball stadium, right? You're going to wear something more appropriate, something more casual. And so if you have a casual business, why would you have the tuxedo of business entity types when all you need is some casual athleisure wear, if you will? So that being said, what entity is right for you? A corporation requires many different documents. Okay, so in an LLC, the document that exists is the rules of the company and defines who owns what, is called the operating agreement. Everything is in that one document. Okay, simple, to the point, bam. A corporation has bylaws. Bylaws define how shares are created. It doesn't actually create the ownership and the shareholders. It defines how the ownership is created. How the shares are created. So then another document, a second document, creates the shares. And then another document determines how the shares are distributed. And then another document gives you shares. So there's just all of these documents that like link back and forth to each other in a corporation. And that's because corporations are hundreds of years old. And that's how they did things back then. Don't know why. Don't know why they didn't wrap it up in one document, but that's just how it was. So an LLC wraps that all up into one document. So when you form it, it's done. LLCs are very modern. LLCs were created in 1977, or were first supported in 1977 by the state of Wyoming. So and they weren't fully supported in all 50 states until 1996. So it took 19 years from 1977 to 1996 for all 50 states to say, yes, we're going to support LLCs too. Their legislatures had to say, yes, we're going to support an LLC, and this is how we're going to define it. So LLCs are more modern and more casual. They're the athleisure wear, is that right? Of business entity types, whereas corporations are the like suits or tuxedos. Okay. And so like, let's just look at this, these two businesses. Sally just wants to protect herself from, little stick men that come by her business and try to like pull a fast one by falling and like, knocking their head on the corner of the thing. She's just trying to protect herself. Okay. She's not trying to have shareholders. She's not trying to get investment. She's not going to IPO. She's not going to raise a lot of money. She's just a small business person. So in her case, an LLC just makes more sense. It's not a tuxedo, right? That's not a tuxedo type of business. Now, on the other hand, we have mom and pop over here. And let's kind of like think of this mom and pop more as like Trader Joe's, okay? Mom and pop have, um, you know, 30 different branches across 12 different states. Um, they they've raised a lot of money. They need to separate the um, they need to separate each location from each other. So like this is one location and this is another location, and they need to have their own ownership. So like this is owned by these shareholders and this is owned by these shareholders. Um, so there's just a lot more complexity. All right. And so because of this formality and this complexity, the suit or tuxedo type of entity type might be right for mom and pop. They still might go by an LLC. And you can see that where corporations will own LLC. So you might see something I saw the other day like Google Holdings LLC. Um, and it was like, okay, well, Google Incorporated is a corporation owned by Alphabet. Um, but then they have multiple subsidiaries underneath them that might be other corporations or LLCs. And so, do you need a corporation? You need to determine that. You can use our Choose Your Own Entity Adventure guide, as I'm linking below. You can talk to a professional like a lawyer or a accountant. But unless you are raising a lot of money very fast in multiple rounds, you're raising, $100,000 seed, $1 million Series A, $2 million Series B, $5 million Series C, over a period of time, over a period of maybe months or years, then a corporation is probably not for you. If you're going that route where you're doing all this fundraising, you're planning on IPOing or selling to another company, you're raising a lot of money from shareholders, then yeah, a corporation makes a lot of sense. But if you are just a small business person that's going to own it outright yourself, or if you're going to have investors, they're just going to buy a percentage of the business. They're going to buy 25% of the business for $25,000. That is much more casual and cut and dry. You can do that with an LLC. So, do you need a corporation? Maybe, maybe not. The other thing that I want to talk about with corporations and the fundamental difference between corporations and LLCs is an LLC has percentages, right? So like this is 100%, and then you own 100%, but then you sell 25% to somebody, and you're essentially giving 25% of your ownership to someone else. All right. A a corporation is a little bit different. So like let's say we have 3 shares of a company. In a corporation, let me back up one more second. So in an LLC, if I'm going to make changes to something, then I need the majority ownership to vote on something. So if someone has 25%, unless they say otherwise, I own 75%, I get to make all the rules because I own 75%. Now, if all of a sudden I own 49% and these 2 people vote against me, then I don't have control anymore. These 2 people own 51% of the business. And so that's how kind of majority voting goes. But there's always this same amount. There's always like 100 units. There's 100 percentage. You can't have 101% of something. Shares are very different. So let's say you've got 3 shares. Each one of these things refers to 1 share. Now, this is why a corporation is better for raising money, raising a lot more money fast, is because this whole idea of having to split up the ownership, anytime you have to sell something, you have to get the signatures from everybody involved. All right. And that's kind of a hassle. So that's why it's better for smaller businesses that aren't changing, drastically. With a corporation, however, you can make these changes with the majority, and you don't have to get signatures from every single Joe Schmo that's an owner of the business. In addition to that, you can create more units. So whereas an LLC has 100% ownership, 100 units, and there's never 101 units, don't get into fractions or splitting it up. Just kind of go with me on this very simple. There's caveats to that, so I don't want to go into that. I don't want to open a can of worms. but you can't have more than 100%, right? You can't have 101%. While corporations are similar, you can print more money. So like right now there are 3 shares, but if I want to add I've got one investor, this is me, I've got my first investor and my second investor. If I want to bring on another investor, I don't want to have to like split up these shares and say, hey, Guy, you just invested, but now I got to take up half your shares and give them to someone else. Instead, what happens is you just print more shares. So there were 3 shares, now there are 4 shares. Okay, so in percentages, they're still 100%, but you can just create more units, and the shares are units. And so that is what fundamentally makes a corporation different and makes it more easy to raise money, is because you don't have to take away from anybody else. If I own 100 shares, you're not taking any of my shares to give them to someone else. You're just printing more shares and thus making my existing shares worth less. So that is the fundamental difference between an LLC and a corporation, and why you might go with one over the other. So this is a very long video. I apologize, but that is such a loaded question. I feel like it needed, a proper send off. The last thing I will say is that an S corp is not the same as a corporation. Okay, this is very common. People say, "Got a Delaware S corp." An S corp is a tax selection with the IRS. It is not an entity type. Both LLCs and corporations can file to be taxed as an S corp. So that's a totally different thing. If you feel like you want to get an S corp because your accountant said to get an S corp, you can still be an LLC and get an S corp tax selection for your LLC. So if you enjoyed this video, please like, subscribe, share with a friend. Get your LLC or corporation through Better Legal. We make it super fast. It's super affordable. Instead of paying a lawyer or accountant, hundreds of dollars an hour, get it all done online. As fast as the state will go, it can be an hour if it's New York, or a couple of days if it's other states. But anyway, thanks for joining, and we'll see you on the next video.